Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. In December 2020, Schultze Special Purpose Acquisition Corp. And Cleaver Leaves completed their previously announced business combination. Joining me to discuss is George Schultze, founder of Schultze Asset Management. George, it's great to see you again. Welcome back to Trade Talks.
Great to be here. Thank you, Jill.
You got it. And tell us why the company has decided to go public via a SPAC versus the more traditional route of accessing the public capital markets through an IPO, as an example.
Sure. Yeah, that's a growing theme these days. SPACs were a dominant amount of all initial public market issuance last year. And I think that trend will continue. I guess the primary reason for a company to merge with a SPAC is just the relative speed versus the traditional IPO process. Also, for those companies that decide to merge with a SPAC, they get a chance to see how the market will react and, sort of digest the news about the new stock offering, including projections. So that's one of the reasons it made sense for Clever Leaves, and I think it's one of the reasons it'll make sense for lots of other companies going forward as well.
What will this allow the new company to do?
Well, Clever Leaves, as you know, it's a very unique company. It offers federally legal cannabis exposure, pharmaceutical grade cannabis exposure, mostly for the medical industry. And it's a Nasdaq listed company. So this really helps the company, in terms of being positioned well for executing on its future business plan. It's well capitalized with about $80 million of cash, which is more than enough to achieve its business plan. And it allows Clever Leaves really, their management team and their board to sit back and execute on their business plan and grow the business, especially the top line. Clever Leaves, as you may or may not know, is one of the lowest cost producers of cannabis in the world. And this will really allow them to execute the business plan of growing revenues and really expanding the business from its early beginnings.
You touched on this before, but do you think companies will continue to look for alternative forms of accessing the public markets, or was this just specific to the unprecedented environment in 2020?
Well, I think SPACs are certainly here to stay. SPACs are, really a wise way for companies that are looking to access the capital markets to, do it rapidly by merging with a SPAC, and they're becoming much more mainstream, as you saw last year. Again, SPACs are about 50% of all IPO issuance. So I think that's going to continue. I think for those companies that are looking for a rapid path to market, as well as the ability to, give projections and, get a sense for how the market may react before their IPO is complete. It's really a valuable tool. It's also great for those investors who can get involved with a SPAC because, for the early IPO investors, they get in with, relatively limited downside. Remember, for a SPAC, the cash that's sitting in the company, it's in a trust account and it's earning interest until the business combination vote. And at that point, investors in the SPAC stock can decide to either redeem or to roll into the new, combined business. So, those shareholders that are involved in the SPAC IPO get a free look, as it were, on the new company that's selected. Hopefully the sponsor finds a good one, like we found with Clever Leaves. And then they can decide on whether they wish to stay invested or redeem at their original price plus interest. And that's, that's a very powerful solution for lots of investors these days who are looking for upside return potential, but relatively protected downside risk. And that's what SPAC IPO investors really get.
And finally, George, switching gears to the future of medical cannabis stocks, what areas are the most attractive for investment and why?
Well, certainly there's big news today with the Senate runoff in Georgia. It appears that based on the results we've seen so far, that the country is leaning a little bit more towards Democratic leadership now, and with that, there seems to be more interest in legalizing cannabis in the United States, whether it's through the SAFE Act, which is a banking regulation, which makes it easier for federally chartered banks to do business with cannabis companies, to potentially just legalization throughout the nation. And so the industry is changing a lot for cannabis in the United States, but it's also changing in other markets. So whether it's medical cannabis or recreational cannabis or anything in between, the dynamic in the market is really changing a lot in the United States, and I think that's where the focus will be. but also similar changes are happening around the world. We're seeing them in Germany, Australia, Israel, Brazil, and even Mexico. Lots of changes where cannabis is becoming more well accepted, and I think as it becomes legalized, in one phase or another, there'll be more and more opportunities for certain companies that operate in this industry, including Clever Leaves, to execute on their business plan and do well and make profit off of this changing and new market that's growing tremendously.
All right, George, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.